Did you know that immigrants in Canada are entitled to 5 different tax breaks, including some medical expenses? Well, now you know. I will explain in details on our next video, so be sure to subscribe and press the notification bell for our next presentation. But today, we are going to discuss some of the best places to live in Canada due to taxing, and you'll learn what tax brackets are for each area and where you might fit in. Are you a Canadian immigrant looking for the best place to settle down? Or are you just curious about how taxation works in Canada? Welcome, everyone. Tax can be confusing, but it's important that we understand the system so that we can make informed decisions about our finances. Today, I'm going to break down the tax systems of 5 different Canadian provinces and provide advice on where new immigrants should live and what they can expect when it comes to taxes. I will also tell you about the best firms you can go to make your taxation process seamless and hassle-free. So stay tuned till the end and let's dive right in. Ontario is one of the most populated provinces in Canada, with a population of over 14 million people. The province is home to the largest cities in Canada, such as Toronto, Ottawa, and Hamilton. When it comes to taxation, Ontario follows a graduated tax system that includes 5 different tax brackets. Those earning up to $44,740 are taxed at a rate of 5.05%. Those earning between $44,741 and $89,482 are taxed at 9.15%. Those earning between $89,483 and $150,000 at 11.16%. Those earning between $150,001 and $220,000 are taxed at 12.16%. And those earning over $220,000 are taxed at 13.16%. It's important to note that these tax brackets may change from year to year based on the cost of living increases or other factors. In addition to income taxes, Ontario also levies sales taxes at 8%, 13% for certain goods, services, and property taxes on residential properties as well as businesses. The provincial government also offers several tax credits that can lower taxable income or provide additional deductions while filing your taxes each year. For new immigrants considering moving to Ontario, it's important to research the provincial taxation system thoroughly before making any decisions about where to live or how to manage their finances. Understanding the various tax systems of each province can help ensure that you're paying your fair share while still being able to enjoy the benefits of living in one of Canada's most populous provinces. British Columbia is known for its low taxes, particularly in comparisons to other Canadian provinces. The province has a progressive tax system that increases with income, but the top tax rate is still lower than in most provinces. For example, taxpayers with an annual income of over $220,000 pay a maximum rate of 14.7%. In addition to having lower tax rates than other provinces, British Columbia also offers several tax credits and deductions that can help reduce taxable income. These include the Climate Action Tax Credit, which provides a refundable credit of up to $1,050, the BC Medical Services Plan Premium Assistance Program, and the BC Education Tax Credit, which allows taxpayers to claim up to $2,100 in tuition costs. The province also offers a number of unique deductions and credits specific to British Columbia residents. Examples include property transfer tax exemptions for first-time home buyers, reduced MSP premiums for those earning less than $30,000 per year, and vehicle registration fees that are significantly lower than in other provinces. Overall, British Columbia has some of the lowest taxes in Canada. Residents benefit from a progressive income-based taxation system combined with numerous credits and deductions that help reduce their liabilities even further. For those looking for a place to live in Canada with lower taxes, British Columbia may be an ideal choice. Alberta is one of the most attractive provinces for Canadians looking to move within the country. Not only does it boast some of the most beautiful scenery, but it also has one of the lowest tax rates in Canada. Alberta residents pay 10% tax on their first $131,220 of taxable income, 12% on the next $131,221 to $157,464, 13% on the next $157,465 to $209,952, and 14% on the next $209,953 to $314,928. Anything over that amount is taxed at 15%. The province also offers a number of tax credits and deductions that can help lower taxable income and provide additional savings for residents. For example, Alberta's basic personal amount gives all Albertans a personal non-refundable tax credit equal to 21% of their federal basic personal amount, up to a maximum of $1,914 in 2018. In addition to its relatively low taxes compared with other provinces like Ontario and Quebec, Alberta also offers many other benefits for its residents. It has some of the lowest electricity rates in Canada, coupled with one of Canada's highest electricity reliability rankings, which helps keep energy costs down. Alberta also has no provincial sales tax, PST, which saves shoppers money when making purchases. Furthermore, the province has a booming economy thanks largely to its oil and gas industry, which provides plentiful job opportunities for new immigrants looking for work upon arrival. Overall, Alberta is an excellent destination for Canadians who are looking for lower taxes coupled with great job opportunities and an abundance of natural beauty, making it an ideal place for new immigrants looking to make a fresh start in Canada. Quebec is a province located in eastern Canada that has one of the largest provincial economies in North America. Its tax system includes personal income tax, corporate income tax, sales tax, property tax, and a variety of other taxes. The personal income tax rate in Quebec is 15% on the first $45,105 of taxable income, 20% on the next $45,106 to $90,200, 24% on the next $90,201 to $109,755, and 25.75% on amounts over $109,755. The corporate income tax rate for small and large businesses is 11.9% and 17.9% respectively. In addition to these taxes, Quebec also imposes an 8.5% value-added sales tax, TVQ, which applies to most goods and services purchased in the province. Property taxes are also imposed by municipalities at varying rates depending on the location and type of property owned. Other taxes include payroll taxes such as the Employment Insurance (EI) premium rate of 1.58% to 1.61%, employer contributions such as CPP or QPP premiums at 5.1% to 5.25%, and fuel taxes at 10 to 15 cents per liter for gasoline depending upon city or region within Quebec. Canadian immigrants considering a move to Quebec should consider the provincial taxation system, local municipal taxation rates, and any additional levies imposed by regional governments such as school boards or transportation agencies. Furthermore, there may be numerous credits available that can help reduce overall tax liability when filing returns each year, including those for education expenses or rent payments made throughout the year. Nova Scotia is one of Canada's easternmost provinces and is known for its scenic beauty, vibrant culture, and friendly people. Nova Scotia has a progressive income tax system designed to promote fairness while funding government services and programs. For a single person earning the median wage in Nova Scotia, they would pay 8.79% on the first $30,000 of taxable income, 14.95% on the next $30,001 to $60,000, 16.67% on the next $60,001 to $90,000, 17.5% on the next $90,001 to $150,000, and 21% on amounts over $150,000. In addition to provincial income taxes, Nova Scotia also imposes a harmonized sales tax, HST, of 15%, which applies to most goods and services purchased in the province. This includes groceries and prescription drugs, as well as sales of digital products such as music downloads or e-books. There are also various credits available to taxpayers under the HST program that can reduce their overall tax burden. Nova Scotia also has other tax programs designed to provide residents with additional support. The low-income tax credit is available to low-income families who have at least one dependent child living with them and who earn less than $25,000 per year. The Senior Citizens Tax Credit provides additional financial support to seniors aged 65 years or older who have earned income below a certain threshold based on their age group. Taxes in Nova Scotia are generally lower than in many other Canadian provinces, such as Ontario or British Columbia, but higher than in Alberta. When considering where to settle as a new immigrant to Canada, there are a few key factors to keep in mind. Taxes, of course, should be an important consideration when making a decision on where to move. As we have seen from the example provinces above, taxes can vary significantly from one region to another, with Alberta and Nova Scotia typically offering the lowest rates. However, it is important to consider more than just taxation when choosing where to settle. The provincial economy should also be taken into account, as this will most likely determine the level of job opportunities available upon arrival. Alberta and Ontario currently offer some of the strongest economies in Canada, while Nova Scotia's economy is largely supported by its fishing industry and natural resources. It is also important to consider other quality of life factors such as access to healthcare services, education opportunities, public transportation, cultural attractions, and recreational activities. Taxation can be a very complicated process, and any mistake can get you in trouble. So I have researched and filtered out the best tax firms in Canada so that you don't have to. Here's what I found. One of the most reliable places to do your tax in Canada is H&R Block, a leading tax preparation firm in Canada that has been operational for more than 55 years. It has headquarters in Alberta and spread out offices across North America and abroad. If you want to know more about H&R Block and its locations, be sure to stay tuned for our next video where we will cover it in full detail. I've also put together some of the most reputable and reliable law firms that deal with many other things, including taxes. Here is the list of these firms and their locations. KPMG Law, LLP, Calgary, Alberta. Ferris LLP, Vancouver, British Columbia. EY Law, LLP, Toronto, Ontario. And Stikeman Elliott LLP, Montreal, Quebec. I've put the links to these and some more in the description. Be sure to check them out. So when selecting a province for settlement in Canada, it is important for new immigrants to research each province carefully before making a decision on where they should start their new life. While taxes are an important factor in determining after-tax income potential, other considerations such as cost of living expenses and quality of life amenities should also be taken into account before settling down in any particular location. If you found this video helpful, please like and subscribe for more content like this. Thanks for watching and see you in the next one.